General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. Still in Q1. Still in February, week 2. Go to logs. Monday, February 10th, 2025. Color. Today. Here we go. Okay. So today we got, today we got the gap down. We pushed up. Price gap down. And we had to push up. Pretty much all day. Okay, let's look at the weekly. So that's the gap in between there. Looks like we're putting bodies in this inefficiency. To this. Still in this weekly dealing range. This does look like it's hooked here, but let's do this coordinate. Okay, that is perfect. Let's go this way. Let's go this way. That way it's encompassing everything. Okay. Okay. Price looks to be rebalancing the old new week opening gap with the body. It needs buy side. And sell side in this area. Let's go to the daily. Let's make this. My target will be this 21. We did clear, and we do have this old level from before that failure swing. This is still relevant as well, as it's been tapped one time. We already swept this. That's that old previous month's high, but we do have outside targets. 22,111 is really, and we have this, but one step at a time. This range high will be first, but it don't make sense to tap this but not tap that. Let me also tag this. We'll make it white. Give me the coordinates. Swing high. Okay, so now to organize these levels. This one's first, this one's second, and then this one's third. This is the first mark in the sand. Still keeping the thesis the same as this is the accumulation. This is the first push out. This is like a short-term dealing range here. Since this is a 3-bar, this is a 3-bar. We can push up. If we do push down, like back to this area, like to this new week opening gap, buys will make sense. But if we continue to push up, I'll wait for the liquidity grab and focus on selling to this level. Let's get this level or this link. The first spot focusing on is the new week opening gap fill. Nope, we do have wicks there. But we need bodies to make it efficiently traded range. H4. Nothing really changes on H4. It's just we got the gap. We do have this fair value gap right here. We could see if this is gonna hold. As an inversion. Matter of fact, let's see if we can look at this gap like this. Let's take off the labels, pricing levels. Then I'm also add an alert here. Make it a little bit extra too, because it could be any time during there. Nas. Okay. Christmas to on the 4 hour, H4 makes sense to look for higher prices. For a scalp. No, big news Wednesday. Let me see if I can grab the calendar real fast. Okay, he spoke today, but he always a red folder. So Powell talks tomorrow at 10. Hold on, wait. Yep, I got that. Powell talks tomorrow at 10. And CPI is Wednesday. Keep in mind. Let's go to H1. Now we got engineered liquidity. Let's note that we did sweep. What is this? Wednesday's low. Yeah, it's not that significant really. If we don't buy here, buying here makes sense. This H1 order block did not create a fair value gap. So note this here. This reaction is weak. I could just type that out really. We have a tap of the H1 bearish order block, but the reaction did not create a displacement. And retrace and higher prices. Before a pivot for the week. Buys will be okay. From version 4 fair value gap, and sales will be okay before highs or above highs. Tuesday high of the week will be ideal. And also note Powell was hawkish last time he spoke. Okay. That's that on that really for the day. So we got our levels to watch and our news event to watch. Y'all have a good day. Peace.